Hello! I wanted to welcome everyone to today's investor educational webinar entitled How to Prepare for the Biden Tax Increase. My name is Kevin Daniel and I'm the president of the Daniel Financial Group. Now, I feel that this is going to be a very informative presentation today because we're hearing a lot in the news about possible tax increases. In fact, I think it's a definite, we just don't know exactly what. But during these unknowing times, it's kind of difficult to tax plan because, well, there's actually been talks about possibly backdating these changes to April of this year, or they might start January 1st of 2022. But what I'd like the main thing I want you to gather from this presentation today is that, well, taxes are going to go up. And it might be a very good time to start planning now. I would like to give a quick warning. Folks, this is not a political discussion, but this is basically a discussion about potential changes to the United States tax code. This is basically for educational purposes only. If you see any concepts and you want to apply them to your individual situation, I would highly recommend you consult with a professional advisor before you make any changes. All right, now let's try to go to a distraction-free zone. Let's try to turn off your phone. Let's close the door. If you've got any extra windows up on your computer, close them. I would recommend you take a couple quick notes. But again, this presentation is not political. It's simply for educational information only. And again, please seek professional advice before you make any changes based on this webinar. All right, so now let's get started and let's focus. Today's agenda. Today, we're going to go over possible tax code changes that we keep hearing in the news that quite possibly could change this year or the first of 2022. We actually don't know exactly when, but there's a strong indication that it's going to happen. I'm going to show you steps that you can take now to prepare yourself for these possible changes. Now, I'm also going to offer you, if you've got any questions after the webinar, you can always contact me. I would love to answer any questions that you may have. So, who is this presentation for? Well, it's for a lot of different people. It's for you if you're working still. It's also for people that have money in 401k, 403bs, and IRA accounts. Does everyone realize that all money that you have in these types of retirement accounts, the federal government, they basically have a tax lien on your accounts. So if these tax rates go up, it would be a big deal to you guys, because the capital gains is one of the big areas that they're proposing to change. Also, if you have any kind of money invested in a brokerage account, this is for you. So if you have that individual stock that's in a non-qualified account and it's grown a lot, well, this is definitely for you as well. Also, it's for anybody that's concerned about outliving their money. Here is the current tax code as it sits today. Currently, the top individual tax rate is 37%. The top business tax rate is 21%. The top long-term capital gains rate is 20%. Those that didn't know what long-term capital gains is, that's all, it's any kind of investment that you've had invested for over a year. It has to be over a year. If it's under a year, it's short-term capital gains, and it's even more. Also, the current tax code includes the estate tax at $11.7 million as an individual and $23.4 million if you're a couple. They also call that the death tax, which actually the death tax, as I call it, is set to expire in 2025, but I have a feeling that they might make some changes before then. So here are some of those proposed changes that we're hearing about in the news. We're hearing that they're possibly going to raise the corporate tax rate from 21 to 28%. They're going to reduce tax preferences for so-called pass-through businesses like LLCs S-corps, and other partnerships. They're talking about raising the income tax rate on individuals if you earn more than $400,000. They're talking about raising it from 37% to 39.6%. They're also talking about taxing smaller estates. Again, the death tax, they're talking about lowering that number. Also, they're talking about implementing a higher capital gains tax rate for individuals earning over $1 million. Biden even mentioned on the campaign trail that he's proposed applying income tax rates, which would be quite a bit higher for most people. The current top capital gains rate is 20% long term, 15% if your income is under $469,000. So these are some of the proposed changes that we're hearing about. But folks, this is my concern right here. This might not be enough. Have you seen the debt lately? It's spinning out of control. In fact, the federal government, they ran a deficit of $3.1 trillion in 2020. That was more than triple the deficit for 2019. This year's deficit amounted to 15.2% of GDP. That's the greatest deficit as a share of the economy since 1945. Why is this happening? Well, a big reason is COVID. The economy is not growing like it was, like it was anticipated on growing, and well, it's been a drag on the deficit, quite honestly. Has anybody seen the national debt currently? Now, as I'm recording this webinar, it's 28.6 trillion, but I bet you it's even higher once you actually watch this presentation. But you can, if you want to see something shocking, you can go to www.usdebtclock.org, and you can see how fast that national debt is skyrocketing. It's kind of shocking and scary at the same time. Here's another problem. We have an aging population. Our baby boomers are turning 65 all the time. In fact, about 10,000 people turn 65 every single day. So what does that mean? That means that more people are using Social Security. More people are using Medicare. More people are using Medicaid. So that's causing the deficit to go up. Here are other possible changes that we're hearing in the news today. Elizabeth Warren's been talking about possibly putting a tax on assets. They're also considering possibly lowering the tax cut on 401k contributions. Does everybody know, how things work when you contribute to your 401k? Well, currently, when you contribute money to your 401k while you're working, that is 100% tax deductible. They're considering actually cutting possibly some of that money that you're deducting. They're talking about possibly adding a value-added tax. Now, the next one is actually my idea, which I think would be easy. You haven't heard a lot in the news about it, but I feel that this is something easily they could change and bring in a lot of tax revenue. Does everyone understand what an RMD is? An RMD is basically, that is a required minimum distribution. So anybody that has money in a 401k, a 403b, an IRA, those types of retirement accounts, you might not realize it, but that money has been growing tax deferred ever since you started those accounts. So what happens is well, at the age of 72, you're actually required to start pulling money off of those accounts if you haven't already. So every year, the balance the year before, there's a total. So at the age of 72, you have to start pulling money off of those types of accounts, and currently it's about 4%. So they could very easily, change that. They could increase it to 5 or 6%, something like that. Now, I want to point out also that the required minimum distributions are very important to be aware of, because if you don't take your required minimum distributions, the government, well, they're going to charge you a 50% penalty. So it's very important to stay up on your required minimum distributions. In fact, they actually made a change a few years ago. It used to be you had to start taking these required minimum distributions at age 70.5 until recently. Well, now it's changed to age 72. Also, they're talking about taxing possibly 100% of your Social Security benefits. I imagine most people are in shock on that, but you might not know it, but now you could actually be currently taxed up to 85% on your Social Security benefits. In fact, if you know, a high percentage of the population, that's what they're taxed. But you're not taxed at 85%. You're taxed at your individual income tax rate, which is substantially lower than 85. If you got any questions about that, you can give me a call. Also, they're talking about raising payroll taxes to 100% of your wage earnings. Currently, your payroll is taxed up to $120,000. So they're actually proposing if you make more than $120,000, they're actually trying to tax that amount of money as well. They're looking at all kinds of ways to bring in tax revenue. So what the heck can I do about it is what I imagine you're sitting there thinking about. That's what I would be thinking. Well, the most popular thing you can do is what they call a Roth IRA conversion strategy. It's the most popular. Another thing you can do, you can stop the bleeding now. You can actually call, if you're working and you have a 401k that you're contributing to in the work, you can call your human resource manager right now and ask them if they have a Roth 401k option. Well, what does that mean? Well, that means instead of getting that, tax deduction on what you're contributing, well, you can pay the tax now. Then you'd never have to worry about the government having a tax lien on all of your retirement money or whatever you change to. You can also establish an A and B trust to shelter assets from the estate taxation. So if they change that death tax number, well, something you might want to consider. You can also consider paying the tax now on accounts for which you will need to draw in the future. You can also utilize life insurance to offset the tax on your assets as well. So let's go over these different concepts. All right, the most popular by far is Roth conversion strategies. Now, I generally talk to all of my clients about the possibility of, doing Roth conversions. What that basically means is that you're converting your traditional IRAs and 401k accounts, 403bs, into Roth IRAs. So what does that mean? That means that you're paying the tax now versus later. I kind of describe you're paying it kind of as you're paying the tax of the seed instead of the harvest. So what now? You're paying the tax now based on the rates today instead of worrying about what rates might rise to in the future. Again, this is very important and this is a very popular concept, but it's you have to make sure you do it the right way. When I help clients with this, we generally do it in stages. Let me kind of explain by that. So when you do a Roth conversion, you want to make sure that you try to stay within your tax brackets and it doesn't push you into higher tax brackets when you're doing these conversions. That kind of defeats the purpose. So you want to make sure that you stay within your tax, brackets when you're doing this, because when you do a conversion, well, you're adding, income. So again, you need to be very aware of, tax brackets and that sort of thing. And I very seldom ever recommend people do it all at once. One of the worst things I've seen, I shouldn't say one of the worst, but a really bad thing that I see people do, is they'll try to do it all at once and it'll push them way into a high tax bracket. And well, again, just be careful and make sure you do it the right way. Also, this is basically allowing you to pay tax using today's rates. Another thing I was wanting to point out, if you have high amounts of money inside these accounts, a lot of times it takes quite a bit to move the needle, but again, if tax rates were going up, or if the capital gains rates go up, you would be in a better position if you do these Roth conversions. Okay, also, the next thing we'll go over is an A and B trust strategy. Several years ago, well, the estate tax was actually $600,000. And this was a very common concept that people used. And basically what it is, it's the use of revocable trusts. Let's say we have a couple. Well, with an A and B trust strategy, each couple would have a revocable trust. And then what happens if someone was to pass away, that person would have a unified tax credit and go into what they call a irrevocable trust once someone dies. And basically that allows a married couple to shelter twice the normal amount against federal estate taxes. Now, folks, this can be very complicated. Again, right now, the estate tax is so high, not many people this concept would benefit. But if they dramatically drop that, estate tax, this concept will start becoming more and more popular. Currently speaking, the estate tax is set to expire in 2025. It's set to go back to the way it was. Well, I have a feeling they're going to make changes before then. So that is definitely a concept to consider. And I would also highly recommend talking to a qualified attorney about this. Also, you can pay tax now versus later. Let's say you have a company stock that's sitting in a non-qualified account and it's grown like crazy, which a lot of people out there have these types of stocks and mutual funds, all that sort of thing. They're sitting in non-qualified accounts. If you have a lot of money sitting in non-qualified accounts and you have a lot of big long-term capital gains, so you've had it longer than a year, and you might want to pay the tax now versus later, because again, the long-term capital gains is definitely on the chopping block, the chopping floor. I definitely think they're going to, make some changes there. That's just my opinion, though. Also, you can utilize life insurance. Life insurance can be used in lots of different ways. And what I notice is as these tax rates start to go up, more and more people start to consider life insurance. You might not realize this, but if you have a permanent life insurance policy, you can actually use loans on your policy, and you can get those loans tax-free. So you can actually get loans, and they would actually be tax-free income to you that was, basically free of all income taxes. Did you know that? You also can use your death benefit. Your death benefit's usually paid with no income tax owed either. So, people also consider life insurance, with the estate tax, estate tax problems also. There's lots of different ways that people use life insurance. So if you've got any questions about that, please let me know. Now, folks, I know this presentation was pretty quick, but I hopefully that you gathered some very important concepts that can help you with these proposed increased taxes. So again, taxes are very likely to rise, and now quite possibly could be a great time for you to act on it. And another thing I always tell all clients and everyone I talk to, if your current financial plan doesn't have a tax reduction strategy, well, you don't really have a holistic financial plan, because taxes is that big 5,000-pound gorilla in the room that people don't generally talk about, or I should say a lot of advisors don't talk about. Well, it's something that you need to consider. And right now, when they're proposing these increases in the tax rate and the tax code, well, it might be a right time to act. So now what can you do? Well, here's what I would recommend you do. I would recommend that you contact your current advisor that you're working with. Ask them these questions. Ask them if Roth conversions are good for you, or if you should consider them, or using any of the other concepts, because the taxes are going to go up. And if you make some changes, you could really benefit yourself. Now, if you don't have an advisor and you just have some simple questions or even difficult questions, I want to make myself available for you. When I sent out the email, it talked about, you had a little link that you could click, and you could actually set up a time to talk to me and that sort of thing. You can click that link, or you can go straight to www.bookachatwithkd.com. And when you get to the web address, you can actually see where you can select, you want to have a 15-minute phone call with me. You can come into the office. It's very flexible, and I would love to answer any questions that you may have, because taxes are very important. And with these changes, then I would love to be there to answer any questions that you may have. As I was growing up, I was always taught one thing. Well, I was taught a lot of things, but one thing that really, really stuck out, and my father always taught me, he said, "Kev, the more information and the more education you have about something, the better decisions that you can make." So that was the big reason about this webinar today, because I wanted to get you some education so you could make some good decisions. So hopefully you found value in the presentation today. And again, if you have any questions, don't hesitate to reach out to your advisor or me, because I'm definitely available to answer any questions. So in conclusion, thank you for joining today. Also, please be safe out there. And until next time, bye now.